In this week's episode of the Stockscores Market Minutes, we will talk about the market crash. Has it ended? If so, why did it end? I'll then do my regular weekly market analysis. We'll look at a market scan in search of opportunity and the day trade of the week on SLP. So the stock market has moved up a long way from the lows. And when I read people's comments on the internet and listen to market commentators, there's a general feeling of disbelief because when we look around, we see the world really in some economic turmoil. And people wonder, well, how can the market have come up so far from its lows given what has happened? Well, even though the market has come up a long way from its lows, it is still also quite a long ways from its highs. We have seen a real haircut in the stock market, and we shouldn't, avoid the fact that we're still down a lot. If you bought 2 months ago, you're really happy. If you bought 4 months ago, you're still feeling a lot of pain. But the question is, why did the market bounce back so much? And I think there's two things to keep in mind. First, fear causes people to do irrational things. And we had a lot of fear in the market because we had basically big sell-off. When markets are going down, people see the losses in their account and they sell for no other reason than fear. And that pushes prices too low. That actually creates a lot of opportunity. We also had a lot of uncertainty. We didn't know how bad this COVID-19 coronavirus thing would be. We really still don't. And it is the uncertainty that causes prices to maybe go down farther than they should because investors have to discount a lot of uncertainty about what's going to happen in the future. And so we end up getting a sell-off that goes far beyond what it should. And then as more clarity comes, as fear dissipates, then the market starts to come back up. And we're probably now at the price that we should have been in March, perhaps a little bit above, because the fear is gone and there is less uncertainty. Now, the question is it over? Will there be another wave to the stock market crash? And I would say that it is certainly possible. However, at this point, there is no reason to think that there will be because there is no sign of weakness. In the past 2 months, we have been in an upward trend. And until that upward trend line is broken, we should remain optimistic that the market has made its bottom. But what I will do for you each week here is look at the markets and assess what is likely to happen in the near term, because the market does telegraph what it is going to do next. And all we have to do is apply some basic chart analysis and look for the breaks of the trends. And on to the U.S. markets. Let's start off with the S&P 500 short-term chart, 30-day, 60-minute. And you can see that the bottoms are rising from left to right. That means the buyers are in control. And until that upward trend line is broken, I wouldn't be too pessimistic, despite what the headlines may say. As I said, the buyers are in control. So we have two trend lines to watch, a short-term one, which goes something like that. But really, I think the more appropriate one is this longer-term trend line, which sort of captures the upward sloping channel that the market has been in. And until we get a break of one of those upward trend lines, I would be generally feeling optimistic in the short term. Looking at the longer term chart, you can see that the market continues to make that V-shaped bottom, which is rare. Typically bottoms go down, they bounce, they go sideways, and then they break to the upside. In this case, we've just been steadily moving higher. Not every stock, but there's been this rotation from one sector to the next as they recover. Many of the tech stocks are actually above where they were before the crash. Meanwhile, of course, the travel sector really lagging in this recovery. Moving along to the Russell 2000 ETF, which is IWM, and that is, of course, a representation of the small cap stocks in the US. And you can see, again, we are in an upward sloping channel. And until that upward trend line is broken, I would remain optimistic on the small caps. On to the Canadian markets, and similar to the S&P 500, but actually lagging a little bit. You can see that we have not been able to break through those highs. We do have rising bottoms,
that is a sign that the buyers are in control. Let me just quickly explain why that is a sign that the buyers are in control. If you think about the market as a war between buyers and sellers, when the sellers are winning, they push prices down. And you can see that there was a number of instances there when the sellers were winning and pushing prices down, but they could not push them as far down as they had the previous time, and that's how that rising bottom is formed. Here again, there's some weakness, but when they push the prices down, they don't go as low as they had just a few days prior. And so what you have over time is that a series of rising bottoms represents generally more strength by the buyers. The sellers are weakening over time, and that's why we call this an optimistic chart pattern. Looking at the longer term chart of the TSX, and similar, we've got that V-shaped bottom, perhaps the momentum slowing, and that is why I think we deserve some caution. If an upward trend line is broken on one of those intraday charts, then we have to take a cautionary stance. For now, there's no sign of weakness, so remain bullish, but as I like to say sometimes, dance close to the exit door in case someone yells fire. On to the TSX Venture. Of course, the heavy denomination of mining stocks in this market has helped it recover well with all the money being printed. Gold stocks have been doing well, and we are almost back to the levels we were at before the market crash. On to currencies, and the US dollar actually broke down last week. You can see if we sort of take out this really abnormal action, we had an upward trend line that was building there, and we broke that upward trend line last week on the weekly time frame. Now we're still well above support, but I do think that could lead us to a test of this support. And so I would not be surprised at all if we see a little bit of weakness in the US dollar in the weeks ahead. That has helped the Canadian dollar break out from this little rising bottom pattern. This again, the weekly chart. So we had a sharp sell-off. We started building some rising bottoms, and then this week we broke through resistance, and that is a signal that the market wants to move back up to that level, and perhaps a vote of confidence that the oil market is going to improve, and we'll look at oil in just a moment. Looking at the interest rate chart, we are essentially pretty quiet here. We are in a long-term upward trend for the bond market, which means we are in a long-term downward trend for interest rates, and it was relatively quiet last week, nothing to see here. On to commodities, let's take a look at gold. You can see the long-term upward trend is intact. I hate chasing trends. We are well into the trend already, and so if you find a gold stock that has a good-looking chart, I think you just want to be really selective. Make sure that it is breaking from a nice period of sideways trading, a lengthy period of sideways trading, because that is what gives a stock a foundation to move up off of. If you are buying a stock that's well into its upward trend already, you have the risk that you're getting in near the high, because of course the higher it goes, the closer it gets to its high, the closer it gets to its turning point to the downside. And that's always my concern when trading a market that's been going up for over a year like this one has. Looking at the oil market, this has been going down for some time, of course, and you can see that we broke the downward trend line, at least in the parabolic downward trend line. The linear downward trend line has still got a long way to go before we get to there. But what I like is that the bottoms are rising over time. That is a sign that the buyers are slowly taking back control from a market where really the sellers were predominantly the leading force in the market because we had falling tops over time. So we're starting to build some optimism. I think that you can be selectively buying the oil stocks, but the key word there is selectively. Many of these oil companies may go bankrupt because they don't have the money to get through the crisis. And so you really have to be selective. And the best way to do that is let the market tell you what to do. The stocks that are breaking from good chart patterns are the ones that the big money believes will survive. And finally, the fear chart, relatively low compared to where it was in, say, 2 months ago, but high elevated still compared to where it was before the market crash. So there's still some concern, lots of concern out there, that we have not yet seen the end of the weakness. And although the market's bouncing back nicely, I really want to emphasize if some of those upward trend lines get broken, we have to jump from one bandwagon to the next and get off the buy bandwagon and onto the sell bandwagon. And so far, I see no reason to jump off the buy side of the market, but I want everyone to dance close to the door. All right, US stocks, neutral long-term, bullish short-term. Canadian, neutral on both time frames. Gold, bullish long-term, but neutral short-term. And oil, neutral long-term and bullish short-term. The market continues to grind its way higher, and there's lots of great trading opportunities. Like every day there are stocks making big moves. It really is a great time to be a short-term trader. Now, while the buyers are in control of this market in the short term, we should not be complacent, as a break of the upward trend could happen at any time. And so keep an eye on those trend lines. Now, gold is holding up well, and oil is fighting to rebound, but both require selective trading. Be picky about the stocks you take in those sectors. Fear is elevated still, and so don't take your eyes off of those trend lines. All right, let's move along to the Stockscores market scan. And this week, we're going to run a scan called the Action Breaks scan. This particular one looks for stocks making abnormal price moves to the upside out of downward trends. It's a good way to find stocks that are turning around from weakness. Now, what I want to do this week is not only run the scan and look at a few charts, but favor also looking at reasons why not to take a stock, and not only which stocks I like. So let's just go through here, and I'll find some that I like and some that I don't like. So let's take a look at this Drone Delivery Canada first of all. And this stock showed some good strength in the last few days. You can see the volume was picking up. Those are signs that are positive. The problem here is that it is still below its downward trend line. And so one of the keys for this strategy is that it has to be breaking the downward trend line. So I would say no to that one. I'll continue to cycle through here. Here's another one, NBRV, that had a really good day on Friday. It was actually a great day trader. Many of us in the active live service were day trading NBRV. At longer term, it's still below that downward trend line. You can visualize that without me even drawing on it. Just draw a line across these tops. That's how we draw our trend lines. And you can see that we're kind of right at it there. And that may limit its upside in the short term. And so I don't love it longer term yet. It needs to start to break some of those critical resistance points. Now here's one that is breaking the downward trend line. I can draw a line across these tops, and you can see that it has been broken. You can also see that the volume is very strong. So there's some enthusiasm. The buyers are coming in aggressively. You can see the bottoms are rising. And those are all positive signs that this stock is going to turn around. Now, there are some negatives. There is a lengthy trading range here. In other words, a lot of stock traded in that $2.50 to $3 time frame or price range. And what's going to happen is when we get into that $2.50 to $3 price range, these people that have been losing money for a few months are going to be motivated to sell just to break even. And so if I was to put a numerical rating on this, I would give it a 6.5 out of 10. In other words, I think it's got a 65% chance of working. I prefer things that are at least a 7. So this is pretty good, but it is not great. Let's take a look at a couple more, and then we'll move on to our day trade of the week. So MLND, you can see, made a big break on Friday with very strong volume after a huge gap down. This is a pretty positive sign that this stock wants to try to make a comeback and fill in that gap, which often happens. And so I think if you are a more aggressive trader, you can maybe monitor the market more on the intraday time frame, and we can watch that intraday time frame here. If you're willing to sort of trade in and out of this name, I think it has potential, but to me, it's not a stock that you buy and forget about. It's something that you have to be a more aggressive, active trader. You know, the fact that it moved up so sharply into the close on Friday increases the chance that it will pull back before it goes higher. And that's why I say if you're a short-term trader, you can watch this thing pretty closely, then it's worth considering. So anyway, these are all different skills that you can gather in terms of how to read chart patterns. The market speaks a language, and the chart pattern is how to interpret that message. And you just have to know how the language is spoken, and it's really quite simple. If you can understand support, resistance, optimism, pessimism, price volatility, and abnormal activity, and practice a lot, then you can really predict where stocks are going to go with a high degree of accuracy. Here's MTEX. It has been recovering for a while. This is not a stock I would buy here because it is coming up into this trading range. And again, there's all these people that have been losing money for months, and when it gets back to that price range, those people will say, oh good, finally, I can sell this loser and break even. And that's why old trading ranges tend to provide ceilings on a stock's ability to move to the upside. All right, let's jump into the day trade of the week. And this week it is SLP. And this is a little bit different than many of the day trade of the weeks that I show, because this is using a strategy called a superhero strategy. And I call it a superhero because these are stocks that are trading very abnormal volume all day long. Now let's remember, this is a 2-day, 2-minute chart. And you can see that it came alive May 28th, and it was trading abnormal volume all day long. What I then looked for is an action candle breaking from a predictive pattern. Now, action candles are the ones with the pink dots. That's my own indicator. People that follow me on my active live service get to watch those indicators as they trigger through the day. And in this case, we have a stock showing an action candle right here, breaking from what's called a pennant pattern. You can see it looks like a pennant. There's rising bottoms and falling tops. It's trading abnormal volume, and then it breaks from the pennant and goes on to a 7 or 8 RR gain, 8 times risk. So for every $100 of risk, required a position of 300 shares. That is $13,800 in capital, but because you can margin day trades 3 to 1, you're only tying up $4,600 of capital. So it made you $800 on an investment of $4,600, which represented a 17.4% return on a 1-day hold, really a less than 1-day hold, perhaps only about 4 hours. All right, well, that has been the Stockscores Market Minutes for June 1st. Please click on the like button if you enjoyed the video. Leave a comment. I read them all the time. And most importantly, subscribe to the channel and trade well.